Hey, good morning, everyone. Brian Hoops here, Midwest Market Solutions. This is Market Insider TV. This is our opening commentary on Friday, September the 12th. Good morning, and I hope your day is off to a good start. We are looking forward to our trading day ahead. We suspect we'll have a little low volume session early this morning, and then we should have better volumes after the supply and demand report is released this morning. We'll talk more about the report here in just a second. Let's first look at overnight markets. U.S. dollar index up 31 points here this morning. Crude oil seeing a nice little bounce, $1.15, $1.16 higher. We have the October and November contracts listed there. Stock market pulling back. We've hit new highs, all-time highs this week, so very strong week for the S&Ps and for the Dow. Not surprised to see a little bit of a setback here today. And going into a Friday, maybe we have more of a little technical correction, but I don't think it's going to be anything more than just some technicals and maybe some profit taking. Gold, silver higher going into the weekend. Corn up a penny and a half. Beans closed the night session half lower with meal down to $1.90 and oil share up 37. Now these two contracts usually do a lot of spread trade between them, and they may be looking ahead to Monday's NOPA crush report and starting to position ahead of that. Oats are a couple cents higher, while wheat's 2 to 3 cents weaker by the night session close. If you haven't already, follow us on Twitter, Midwest Markets, and at Brian Hoops. We'll be bringing you more market information throughout the day, especially after the 11 o'clock supply demand numbers. And if you're not on Twitter or X or whatever you want to call it, you can visit our website, sign up for our text message service, where you get a lot of this information sent directly to your phone. So that's at MidwestMarketSolutions.com. Some of the news here this morning. This weekend's forecast suggests warmer temperatures that'll aid in field dry down of corn. And next week we see the same thing. Nice harvest weather for the most part across a lot of the Midwest. The supply and demand report comes out 11 o'clock Central Time this morning. Trade is expecting corn yields to decline. That's why we've seen a rally here the last couple days. To 186.2 bushels per acre. That'd be down from 188.8, so about 2.5 bushel less than last month. And ending stocks should fall from about 2.117 all the way down to 2.029 billion. The report looks to be a little bit constructive in that regard, although these yields are still going to be near record high. Market isn't expecting much of a change in yield or ending stocks for soybeans. Trade guests on the yield down to 53.3 bushels per acre. Ending stocks should be very close to last month at 288. But we are hoping that we see better news. We have some yield data coming out, and for the most part, I think yields are coming in below what expectations were. So I'm pretty confident we've seen the highest yield numbers from the USDA of the season, and these numbers will continue to fall lower. Coming up on Monday, the NOPA crush report will be out at 11 o'clock a.m. Average trade guess is 182.9. That would be a new record. That's down from July, but much larger than last year's 158 that we saw in August. And the largest crush on record is 168, set back in 2019. This would be a very positive number. Why we're starting to see some meal under pressure, oil rallying, anticipating that report. ConAb reported their final production figures of the year, and the crop size in Brazil at 171.5 million tons. That's up 1.8 from last month. Corn production 139.7, up 2.7 from August. Both of these numbers are record large, and I think this could be exceeded this next year, at least as far as acreage goes. We're going to expand acreage in South America in both Brazil and Argentina, and that would put more product on the market at a time we really don't need additional products. We have seen just very, very light cash cattle trades so far this week in the north. $2.40, $2 to $3 lower. In $3.78 dress, that's $5 lower than a week ago. We noted the cutouts have likely topped. We think the cash has likely peaked here for at least for the near term, and we'll see a little bit softer cash trade this week. Cutouts are continuing to work their way lower, and most likely we've seen at least an intermediate summer type high in the cattle market. Now, a week from today, we'll have a cattle on feed report. That does look to be bullish. We'll have the estimates in our newsletter already. So if you haven't signed up for that, we hope you do. Have a great day. I'll be on RFD TV at 8:15 this morning talking about these markets. Hope to see you then, and we'll talk to you again soon.